Hey, what's up, everybody? I am Jason, and you're watching my channel, Micro Investor. All right, so in this video, I want to talk about the next recession. If you've noticed, there have been a lot of people talking about the possibility of a recession coming here soon, and that has to do with lower interest rates, the stock market being at an all-time high, and a bunch of other reasons, political, etc. And real quick, this isn't any sort of financial advice. I am just a guy in my car making a YouTube video and hope that you would take some of this information, do your own research, and if you found it interesting, like and subscribe if you haven't already. Now let's get to it. So one of the reasons why a lot of people talk about the next recession has to do with lower interest rates. Because with a lower interest rate, that means that it's much easier to pay off a large amount of debt. Pretty much the rate of the interest is about the same as inflation. So it's real easy for a large company, to take out large amounts of debt and then just pay it off as they normally would, because the interest rate is at a fixed rate. So if interest rates were to go up, some of these companies wouldn't take out that large of a loan, because obviously it would cost them more money to pay it all back. But with these low interest rates being, about the price of inflation, that means that these companies are able to just keep, pulling out money and keep investing into new things, which is why a lot of these companies have been doing so well, and hence the stock market. So lately I've been encountering a lot of people that don't want to buy into the stock market because they feel like right now stocks are too expensive. I'm also finding people that don't want to buy a house right now because they feel like the house market is too expensive. They'd rather pay someone else's mortgage. And I get that the stock market has its own bubbles, and so does the real estate market. And every stock is not created equally, and every piece of real estate is not created equally. So both those things you have to do your own research in on what you should do. So let's say the stock market is crashing and we're going into a recession. What would I do? Now, me personally, I would not stop buying into my Roth IRA, because that is money that grows tax-free. Now, you say the stock market crashes, right? What that does is that opens up cheaper buying opportunities for stocks, like say like a high dividend ETF or something that you want to buy into. What that does is it gets you in at a lower rate, tax-free, and you can easily make more money in the long run. I mean, that's me talking. That's what I would do. And that's what I've done before, and it's worked out great for me. And another thing, obviously you want to hold cash. I always hold cash. I right now I hold at least like $10,000 in cash. That's something that my wife and I do. And the best way to hold cash, if you're thinking that you're going into recession, you don't want to buy into the stock market, definitely don't put into a big bank that doesn't pay much of an interest rate. You put it into something like, say, Wealthfront or Ally Bank that pays over a 2% return on a savings account, which is very great with inflation, and that makes your money always just continuing to making money. And with that capital, then you can take that and buy stocks or whatever you want with it. And another area where I would consider putting money would be into gold. If you didn't know that when there is fear in the market, the price of gold usually does rise, which is something that we're kind of experiencing right now. The thing about gold, which makes that so interesting, is that unlike oil, when oil's pulled from the earth, it gets used and is gone. When gold gets pulled from the earth, it's still around, and pretty much all the gold that has ever been mined is still around. If it gets made into something, it just gets, sometimes gets melted down and reused for something else. So let's go back to the stock market and why I would still invest into it with the possible fear of a recession happening. What I would do is, what I still do is I buy into a lot of ETFs. I buy single stocks, but I buy a lot of ETFs as far as my retirement goes. And if we were to look at an ETF that tracks the S&P, like say VOO or iShares IVV, we can see that regardless of what happens, these things still grow in value. And with this example, I'm going to show IVV because it has more history. So back on October 8, 2007, IVV was trading at $156.79. That's where it closed at. And that was the all-time high at that moment. And that was just before the big market crash. Now, March 5th, 2009, IVV was trading at $68.19. That's the lowest that I have here on this record here. But if we go to now, IVV is at $302.49, and that's as of July 12th, 2019. So if we look at over the last 5 years on IVV, this stock has gone up over 50%. So that's a 10% return on the price of the stock. But at the same time, IVV also pays a dividend of 2%. So it's averaging a return of 12% a year right now. And I make sure I buy these index funds with already taxed money, with money that I've already paid taxes on, so that way it can grow tax-free in my Roth. And if you're in a higher income tax bracket and you can't pay into a Roth, there is a thing called a backdoor IRA. You might want to look into that, and that will still let you buy into a Roth regardless of what your income tax levels are. So pretty much what I'm getting at is, I wouldn't stop investing for a what-if scenario, because a what-if scenario could happen at any time, and a recession could be 5 years from now. We don't know when the next recession is going to be. We can't predict any of the markets, so pretty much we kind of just have to hold it out. And if you're really feared for the market, then like I said, hold more cash, which is always a good thing to do anyways, is always have some liquid assets. And like I said, you can put that money into something like Wealthfront or Ally Bank, which pay a really good return on interest. But anyways, if you found this video interesting, please like, share, comment, and subscribe. I have new videos coming out on my channel all the time. Thank you guys for watching. I'll see you guys next time.